Bring in Wedbush Securities Global Head of Technology Research, Dan Ives. So, Dan, welcome. So many topics to run through. We'll get to the White House meeting in just a moment. Any reaction to the Apple products the last couple of days that we've seen and what this is going the impact this will have on their financials?
Look, it's super smart. I mean, look, they're going down market, but they really have to because right now they're looking to get more and more new buyers when it comes to Macs, when it comes to iPhones. And that's the smart strategy because the reality is AI is coming to Apple. And this right now for them, if you look for memory and you look at everything that's happening, I mean, they're doing a very good job managing. And I think this could be ultimately 100 to 200 bip incremental growth to the June quarter.
Wow. And I know that people are hoping to hear maybe something from Jensen Huang one way or the other on memory pricing. He's speaking right now at this Morgan Stanley conference. Here's something else he addressed, Dan, a couple of moments ago. I just want to mention it. He said that Nvidia's $30 billion investment in OpenAI could, quote, be the last time we'll have the opportunity to invest in a consequential company like this. He's talking about because they could have this IPO by year end. But what is the broader significance of that statement, do you think?
Yeah, look, part of it is he's playing a game of poker, right? I mean, there definitely could be more investments, obviously, in the coming years, But I think the reality is there's more and more pressure for OpenAI, for Anthropic, for these other companies, where they're not just going to continue to get these investment dollars in the tens of billions. They're going to have to ultimately show profits. It's an arms race, too, that's all happening. And I think you're seeing that with Anthropic and software and what's happening there. And Jensen's well aware of it. And he knows he has the magic wand. And when he talks, everyone listens. So, this is very strategic in terms of what he's saying here relative to OpenAI, a little shot across the bow.
The revolution will not be televised, Dan, but the AI revolution is going to be powered largely by natural gas. I know you're not the energy guy, but we've been talking a lot about the war in Iran and energy prices. Any part of you worries that what we're seeing in energy at some point may play havoc with AI?
Look, Brian, no doubt. I mean, obviously, you're the energy guru. And I think the reality is that when you look at what's happening right now, the biggest worry is the shortage from an energy perspective. There's more data centers under construction than active data centers. It's why you have the White House meeting today. These companies are going to have to flip their own bill. And look, nat gas is going to play a huge role. And big tech companies, the hundreds of billions they're spending, energy is going to be a piece. And also, it's going to be a big second, third derivative. I could argue energy is going to be one of the biggest derivatives of the AI trade.
Yeah, and that said, Dan, I've been watching your list of kind of, where would you be buying as we see this rotation, kind of vicious rotation? One day it's the software names that are up, and then Micron's down 7, and then it's up 7. And I think ServiceNow is one of the ones that you feel kind of confident about, maybe in the software space. What do you think is happening broadly here?
Yeah, I think first off, it's that Anthropic AI ghost trade fear, right? And I do think that's a bottoming that we saw last week with the Anthropic event. I think investors realize bark's going to be worse than the bite. Software, I think, is bottoming out. I talk about Microsoft, Salesforce, ServiceNow. You look at everything McDermott's done. Cybersecurity, look at CrowdStrike's numbers, Palo Alto. And I think Palantir, both strategically how they're positioned, also from a military perspective, that's going to be a huge positive. Look, this is not the time to throw in the towel on tech. It's a very bumpy, turbulent period, but you look at names like Microsoft. You look at sort of navigating the storm on safe names, defensive, but also offensive. And like I've said, I think the software sell-off here, the most disconnected sell-off I've seen in my career on Wall Street.
The most disconnected you've seen in your career, yeah. And there's Palantir, obviously, with everything going on there. Quick last thought on this kind of fight between the Pentagon and AI. Is it all just a show?
Look, I think it just speaks to, the two worlds are colliding for, an Anthropic, right? And I think, obviously, OpenAI came in there, a lot of soap opera, what we saw Friday night. I'd say they ultimately are going to have to rely more on Palantir, more on the traditional software base. The LLMs are important, but they're going to be plug and play over the coming years. It's about the data. But for Anthropic, look, I think they touched the third rail situation. This is going to be, a very contentious issue within broader tech over the coming weeks and months.
So what are people getting wrong then? If the markets are unemotional, they're selling software because they believe something is occurring, Dan. What are the sellers getting wrong?
Yeah, Brian, what the sellers are getting wrong, they think Anthropic's going to unseat software players. They think structurally software is broken because of LLMs. Anthropic, OpenAI, and others. And I think that's, like I said, that's a fictional tale. Software, maybe they haven't improved it yet from a monetization perspective, but Salesforce, ServiceNow, Microsoft, cyber names, you look at Checkpoint, CrowdStrike, Palo Alto, others, they're going to play huge roles. But look, that's what we're going through. This is going to be an arms race, but the Anthropic view that they're going to replace software, that's a fictional tale that I think ultimately will be a bottoming event for software.